Hi, this is Kerry Artak with Wicked Stocks. Before we jump into today's Apple report, I just want to encourage you to please click like if you haven't already. It helps us out a great deal in being found on YouTube. And subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded. That includes the Daily Tesla and Daily Apple report. And check out wickedstocks.com, where we offer a full assortment of daily and weekly video analysis, including daily analysis in the Triple Q, that is the NASDAQ 100 ETF, daily analysis in the SPY, that is the S&P 500 ETF, two individual stock pick videos every week that you never see on YouTube, and weekly video analysis in the S&P 500 index, the NASDAQ 100 index, and analysis in the long bond ETF, the TLT, all for a very reasonable $47 a month subscription price. And if you sign up, you have a 5-day free trial. If you don't like what you see within 5 days, just shoot us an email and we'll refund you entirely, no questions asked. Now on to the Daily Apple report for Monday, April 10th, 2023. Let's take a look at the charts, big picture, work our way in. It wasn't long ago, early January, that we bottomed out at that targeted lower 120s long-term support, 121.82 to 127.26 now. Combination channel, bottom and rising, long-term two-thirds speed line. We came off of that area nicely. At the time we tested it, I mentioned how the lower 170s channel top should be considered attainable by some point in 23. About a month later, that was answered as more like 3 to 5 months when we gapped above and settled above this descending channel top that is presently well below the market at 137.10. And most recently, we closed above this range of resistance, now support now. I've reduced 160.49. Actually, you don't even see it here. It's still there. There are other things in the daily chart that I'm more opting for, and I'll get to all that in a moment, but really is 158.13, this long-term descending two-thirds speed line. This is our base of support in combination with other things. You could actually say the 153.99 rising one-third speed line. This narrowing zone is our base of support really into later April. If we happen to fall back into this area this week, it is a buy opportunity through the rest of April, because above which this 171.71 channel top remains a 3 to 5 week objective. And just know that holding really above 158.13, that's more like 2 to 3 weeks. And we're a full week into that right now. So over the next week or two, I'm expecting a test of the low 170s. Let's take a look at the day itself, where to begin. There's a few things I really do want to show you here, I can start really with any chart here. 160.16. That's why I've reduced 160.49, that 5/8, and I'm opting more for 160.16. Now, 162.14 is still there as a session containment level that's performed quite well Thursday, Friday of last week. That is nothing more than the spike high going back a couple of weeks. We fell off, closed negative on that day. I like the spike highs and lows better for follow through support and resistance. They tend to have a little bit more meaning, as this one has. It's contained daily selling pressures for the last 2 in a row. It is our day support. So this is the day trade support level still, above which 164.91 is in reach. 164.91 is a upside 5/8 Fibonacci over the last 3 days. So the Wednesday high against the Thursday low, 5/8 back up, 164.91. We actually tested that area on Friday. I had a slightly higher number of 165.11, as you recall. That is the low of the high. But the 5/8 upside, I really think, is our upward pivot point today. If we push or open today above 164.91, we could see a pretty decent rally today up to the 169.33 channel top, perhaps. Now, of course, on the way up, I have minor points at 166.17, 66.84, and 68.35, all able to contain intraday activity. But it really is 164.91, I think, that has the most meaningful. It is sort of the momentum indicator. If we happen to push or open above 164.91, don't discount the possibility for 169.33 intraday. And then we are very close then to reaching our objective at 171.71. That would likely be, over the next day or two. That 171.71 level is really the beginning of a range up to, sorry, that is the wrong chart, on the weekly chart up to 171.86. Also note that as we push into the low 170s, I'll have this marked all week, that 170, sorry, that should be that should be 1% below 171.86. That 172.05 needs to be changed. Just know that 170.14 is correct. It is 1% below 171.86. And as we push into the 1% zone for resistance or support, it is really the beginning of the area, the 1% zone on long-term line studies. So as we push into the 170 handle this week, assuming we do, that is the beginning of the sort of long liquidation, whether you've been long, for the last 4 months, for the last 2 months, or for the last 2 weeks. That is your area to liquidate a long position. I mean, I think you should respect the low 170s and its ability to contain buying, through the rest of the second quarter and possibly into later year. If we push into this area this week, you could begin scouting out longer term out of the money puts, the low to mid 150s if you're more of a 2 to 3 week position trader, quite possibly into the 130s again. Although I really want to see what the charts are showing in terms of rising channel support and speed line support once we push into the low 170s, and we'll just kind of take it one day at a time at that point in time. So I think that pretty much covers the upside. Downside today, once again, 162.14 is this spike high, can contain daily selling pressures. But if we break or open today below 162.14, as I mentioned earlier, 160.16 in reach. And that is an intraday support level. I grappled with whether to call that a session containment level and 162.14 an intraday support level. But I do think that if we close today below 162.14, in other words, below essentially Thursday, Friday lows, I think that carries with it extra weight, and I would anticipate the rising channel bottoms. Now, there's all kinds of things going on, but we've got 158.13 as the beginning, 158.13, this long-term descending two-thirds speed line, as the beginning of a range of support down to, that's the wrong chart, down to 156.95. There's many ways you can construct channels. I always look for the most extreme forms. In other words, I can't really get too deeply into it right now, but this 157.48 is based on these two highs, whereas 156.95 is based on the longer term, off this initial early March high. So you can see that intermediate high doesn't even touch it. And I think that this is the more proper support, 156.95. 158.13 down to 156.95 if tested over the next couple of days. And once again, it is considered really a 1 to 2 day target if we close today below 162.14. The 156.95 to 158.13 area, well equipped to contain weekly selling pressures. And we could come off of here as we move into later April. Once we test 156.95, we can, within a couple of weeks, quite easily reach this long-term objective at 171.71. I'll also mention that even if we do close below 156.95, we still have this trend-defining speed line at 153.99 to reckon with. I'm not comfortable playing the short side as we move into later April and May trade unless we close below 153.99. And then I think the market has indicated a good high through the rest of the second quarter. We should then continue into the 130s within a month or two of doing so. But we're a long way from that right now. We are still en route to our overall objective that's been in place since January, really, most decidedly in early February, and then secondarily again just a couple of weeks ago, about a week and a half ago, above the upper 150s. So I think that is pretty much all that needs to be said. One more thing I might as well mention. I will mention that the SPY managed to close. I don't know if this chart is representative, but it closed just above this long-term speed line, just so you know, on a week-by-week basis. That is constructive for the SPY. And crude oil, the West Texas Intermediate crude oil, the June 23 active contract, the lead contract, did not settle above this channel top last week. Tested it quite a bit. It's at 80.17 this week. We need to close above it by a 1% margin. You could just add 80 cents to that. You might as well just round up to $81 a barrel. If you see $81 settlement any day this week, followed certainly by a Friday settlement of 81 even, then this market should continue into the 97.14 level over the next 2 to 3 months. That would add pressure, upside pressure to the interest rate dynamic, and I think probably some degree of weight to the stock market itself. So I just wanted to put that out there, but that has not happened. And as long as that hasn't happened, this market should fall into the lower 70s over the next month or two, and even lower perhaps as we move into summer trade, which should bode well for the stock market unless, there's so many ways to read this, unless reduced crude oil prices are a function or a response to a recessionary environment that emerges over the weeks ahead. And that obviously would be probably bearish for the stock market itself, but I don't want to get too deep on all that. I'm going to leave you with, which chart should I leave you with? I suppose this is as good as any. 162.14, good day support, and 169.33, good day resistance. Just keep in mind, we're still expecting the lower 170s over the next week or two. You have a great day. I'll be back tomorrow with another Apple report.